I'm very certain that if you're someone who invests in the stock markets, or even if you're a beginner, and if you're at least somewhat curious, then you've heard the term SIP at least once before. If you haven't heard of it, it's alright. SIPs is what I'll be talking about in this video. What does an SIP mean? How does it work? You can take advantage of SIPs. I'll be explaining all of this in quite detail. And also at the end of the video, there's a bonus tip for you. So make sure to watch the video till the end to understand what SIPs mean and also for the bonus tip. Hi, I am Pravek. I am a final-year student at BITS Pilani, Hyderabad Campus and currently interning at Morgan Stanley. In this channel, I talk about investing, stock markets and personal finance in general. If that is what interests you and you want to learn more about, make sure to hit the subscribe button if you haven't already. And without further delay, let's get started with today's video. Believe it or not, what happens is that most of the investors investing in the stock markets invest irregularly. And now what I mean by irregularly is that they invest with different amounts every time they invest in, and they invest at different times as well. They don't have a particular frequency of investing in the stock markets. Now this works with very few investors, but that too who have very good knowledge about stock markets and they have quite a good experience. It does not work with most of them. It doesn't work for you, it doesn't work for me. So we need to have a discipline. We need to develop a discipline to invest in the stock markets, both in terms of the amount we invest in and also the time period and the frequency with which we invest in the stock markets. That is very important to generate good returns. And that is where SIPs come into picture. SIP stands for Systematic Investment Plan. SIP is where you invest certain amount of your savings every single month without fail and on the same date. Now you need to do this with discipline. And if you wish to change the amount that you are investing in the SIPs, you can do that at any point in time. There's no maximum limit to it, but there's usually a minimum amount to invest in SIPs. But you don't have to worry about it. You can start investing in SIPs with as low as 100 rupees per month. But if I were you, I would invest at least 20% of my savings every month without fail. And that is how discipline builds, and that is how you will be able to generate better returns for yourself in the long run. So make sure to do that without fail and with discipline. And if you don't know about it, I made a video on this exact topic a while ago. So if you are interested, go check it out. I think it will be displayed somewhere over here right about now. So this is all one way of investing, the SIP method. But we also have other way of investing in the stock markets, and that is using the lump sum method. Now believe it or not, we might not know the name of the method, but this is what most of us invest using. Let me explain what lump sum method is. The lump sum investment method is where you invest a lump sum. A lump sum refers to a huge amount which is much bigger than your usual SIP amounts, like maybe 1 lakh. You invest that lump sum in the stock markets and you forget about it and you never invest in the stock markets again. Well, that's not how it works. Investing is simple, but it is not that easy as well. So investing using lump sums comes with a lot of problems. Well, I'll be addressing few of the problems that lump sum investment comes with, and I'll also be explaining how you can avoid those problems by using the SIP route to invest in the stock markets. So the first problem is the problem of getting started. Let me ask you one thing. If I were to give you two options, the first one being very easy to start with, it is very easy and very effortless. And the second one, it is very difficult to get started with in the first place. And also, it is very tiring, both emotionally and physically. And also, the chances of succeeding in it is very less. You are more likely to fail. Which one will you choose? Most of us would like to go with the option 1, right? We want as less friction as possible in our activities that we do. It's natural. It's what we humans want. So let's take the example of lump sum investment. Now suppose we have a lump sum of about 1 lakh that we want to invest in the stock markets. Maybe you've got a bonus or something like that. You have 1 lakh. Now this 1 lakh is just for the sake of simplicity of calculations. And I'll be using this example of 1 lakh throughout the rest of the video. Now you want to invest it in the stock markets. This 1 lakh all at once. Well, you need to be extra careful with it. You need to be careful where you are investing it and in what are you investing and at what time you are investing in the stock markets. You can end up risking it, right? It's a huge amount. You can lose a huge proportion of it. So you need to be extra careful if it were a lump sum amount. But let's take the example of an SIP. SIP amount is going to be very small compared to your lump sum, right? So you can afford to risk it. It's not that you're going to lose entire money or a huge part of it. It's already very low. So you're not going to lose much of it. So it's essentially less worrying when compared to that of the lump sum. So that is why SIP is very good for beginners and also for regular investors who invest in the stock markets. And that is why you should also invest using SIPs too. SIPs will also help you stay disciplined. It is almost frictionless to invest in the stock markets because of the amount being very low. So the second problem that lump sum investment comes with is regarding timing the market. So when it comes to the stock markets, naturally there are going to be lots of ups and downs, and we can never predict what is going to happen and we can never know what is going to happen to the stock markets the next day or the next week. And we here refers to almost every one of us. No one can ever tell what is going to happen to the stock markets the following day or the following week. We can anticipate, yeah, sure, but we can never tell for certain what will the situation of the stock markets be. Now let's bring that 1 lakh rupees as an example again. Let's say you invested that 1 lakh in the stock markets today. Let's say that the market has gone down the next week. So you're already at a loss, right? If you had known that the market is going to drop the next week, or if you had predicted somehow, then you were better off investing those 1 lakh rupees the next week. But that didn't happen. We never know for sure, right? We won't be able to say what would happen to the stock markets. You could have bought more number of shares with that same 1 lakh rupees and you would have been at a massive advantage. And also since the market has gone down and you got more number of shares for that same 1 lakh rupees, now the chances of those shares to go high, to increase in the following weeks would have been more higher. But there's no way of knowing it. Hence, you would have ended up in a loss. Now let's take the same example, but let's flip it. Let's think about it the other way around. You have invested in the stock markets, the same 1 lakh rupees in the stock markets today, and the next week the markets have gone up. So yeah, congrats. You already made a profit now. So the chances of you losing money or making money is equal, and it's all based on luck. So you never know for sure. So that is why I tell you stay away from lump sum, because it is very risky. The fluctuations would be very huge. You would end up losing money at the same rate you would have gained money. But let's take the case of SIPs here. Let's try to understand how SIPs will solve this problem. Let's say you were to invest 1,000 rupees as a part of your SIP every single month into the stock markets. And let's say today you're investing that 1,000 rupees and today the market is high. You don't have to worry about it, because what will happen is you will be getting lesser number of shares at a higher price today, but probably the market is going to go down the next month. You will be able to buy more number of shares at a lesser price for the same 1,000 rupees. You see what is happening? The high of one period is being compensated by the low of the other period. And this is referred to as the dollar cost averaging, where the highs of one period is going to be compensated by those of the other periods, and hence averaging out all the highs and the lows throughout your entire investment horizon. So this eliminates the need to watch and time the markets, because investing in SIPs will itself take care of it. So let's talk about the bonus that I promised at the start of the video. Invest using SIPs by default, and the amount you wish to invest as a part of your SIPs is completely dependent on you based upon the financial goals that you want to achieve. So once you decide the amount, stick to it no matter what, and invest every single month on the same date without fail. And coming to the bonus, very rarely there will be instances where the markets will be at an all-time low. Like for example, during the COVID times, or when the news of the Russia and the Ukraine war broke out, the markets were at an all-time low. And this is the opportunity where you will invest a lump sum amount. Yeah, you heard that right. Invest a lump sum amount into the stock markets when the markets are at an all-time low. So when the markets start recovering, you'll be able to generate more returns. Think about it. And whether you apply this bonus into your investment portfolio or not, make sure to invest using SIPs. SIPs is a must. You should have no excuse about not investing using SIPs. I keep telling this because if there is one key takeaway from this video, it should be this. Invest using SIPs only and stay away from lump sum amounts as much as possible. And with all that said, we've reached the end of the video. Thanks a lot for watching till the end. I hope I shared something valuable and helpful to you. And if you did find it helpful, make sure to hit the like button and consider subscribing to the channel. So thanks a lot for watching, and I'll see you in the next one. Until then, happy investing. Bye.